So today's cardinal lesson, we're talking about long-term care insurance, and we're really answering the question, why should you buy long-term care insurance? Why should I have it? What's up with this stuff? I want to push it to Tom, and I want Tom to share with you why we're doing this video today.
Yeah, I mean, of everything that we do in our practice, the thing that impacts you and your family the most, it's some type of long-term care event. If that happens, it upends your world, it upends your family world, and you need to think through it now while you still can and come up with a plan for that. Because what a lot of times happens is when there isn't a plan in place, the event happens, and the sole focus is on how do we pay for it? Where do we come up with the money to do this? When in reality, what you want the focus to be on is what's best for mom and dad, what's best for my spouse in terms of care. We want the focus being there and less on the money aspect of it, because the money aspect is important, but that's what insurance can do. Is it can help provide a way, a very easy way to fund the care that you were looking for. And so I think this is really impactful. I've been through it. We'll talk a little bit about my story here in a little bit. Hans has been through it with his family. Again, this is extremely important to think through. So let me bring up the show notes. We'll get into that. We'll get onto the board and we'll get going here. You can find these at the link below our video. They're also on our website at cardinalguide.com. In the show notes, we have there was a study that a company, One America, put on where they gives you a lot of good statistics that, interviewed, I think 1,000 different people across various age range and really got an idea of what it is. I'm not going to focus too much on the exact data in the study right now, because we have more sort of important things on the board to go through. But if you're interested, download it, read through it. I think there's a lot of good information in there. And so let me turn it back to Hans and we'll get going here.
Okay, so we're going to open today. We're going to go over the 5 most common objections or retorts or what people say. And they used to say this a lot more to us than they do now. And I think we're just getting better at how we handle these conversations. So we're just taking these on in video today. So I'm going to start out with the first one. I'm going to be going back and forth with Tom. So a lot of people just say they're going to stop the conversation. They'll say, I'll just self-insure.
Yeah, I mean, I think that is something that oftentimes people will say. A lot of times it's one that have been a good job saving, and sometimes it's coming from their financial advisor, right? Maybe we're not helping them with their investments. They say, "Oh, you have enough; you can self-insure." I do just want to point out, by definition, insurance is the pooling of risk, where a bunch of people put in and they pool the risk of that care. There is no such thing as self-insurance. You're not pooling any risk. Really, what you're doing is you're self-funding the problem. I will pay for it if this happens. And really, it's a bet that it won't happen. If you really get down to the root of it, you were saying, I don't think this will happen to me. I don't want to pay for insurance for it. And I think there's something, we get this into a little bit later when it comes to cost, but really price is only a problem. Cost is only a problem in absence of value. So if you don't think you'll need care, then why would I pay for something that does that? And this is true across the board on all these we're going to go through. The people we never get this from are ones who have been through it. If their family has been through it, if their parents have been through it, if their spouse has been through this never comes up, because they know that if this does happen, it is hugely impactful. And so again, I just want to push back a little bit. I'll self-insure. I mean, you might have enough that you can self-fund, but do you really want to? And again, I think that is just something that really a lot of times it's coming from a place of denial, not wanting to think through this difficult issue. And it's a pretty easy way to say, oh, I'll just pay for it if it happens.
Well, yeah, and a lot of stockbrokers, financial managers, financial advisors tell their people who are multimillionaires, some of them just millionaires, they tell them that. Well, you got enough money to pay for it if that happens. Go ahead. And it just, why would you want to spend your fortune paying for something? People who have accumulated a lot of wealth didn't get there by paying their own healthcare expenses and avoiding insurance. So enough on that one. This next one, oh, my kids are going to take care of me. So what do you have to say to that, Tom?
Yeah, I mean, I think what choice will they have if you don't have insurance, right? I mean, yes, they're going to be there. Of course, they're going to take care of you if they have to. is that really what you want them doing? Because what that really looks like, and we have some examples we'll get to, is that means them putting their lives on hold, right? Them stopping what they're doing. They can't go out and have the lives they do. Depending on the age, they might have kids they're raising and they're working. And so you're going to have them stop working, retire early. I mean, it's just this not a realistic example. And with the absence of plan, what choice will they have? You're forcing them to make that decision. And again, this isn't to say that the kids aren't going to be involved in the care. If you get sick, your kids are going to be there, but you want them there more as sort of care managers, right? Managing the stuff, bringing in the people to take care of you. You do not want them taking you, getting you in and out of bed, helping bathe you, helping you go to the bathroom. That's not what you want your kids doing. You want them there to be your loved ones, to spend quality time with you sort of as things are progressing, and be there as your kids, not as caregivers. And so again, it's just is not a great scenario to force them to have to make that decision of how they do that.
Well, and added, going back to the first one, is if you're self-insured, as you call it, or self-funded, you're going to use your own money. It's not going to be you pushing the buttons on the money. It's going to be your kids. So not only are they going to be taking care of you, or if you have a lot of money and a lot of wealth, then they're going to be the ones accessing that money. And what I would question is whether they're well prepared as you are to do that. You're not going to be able to do that for yourself when you're needing care. So we, a lot of those people come to us, the adult children, for help in that money management. So the next one is none of my relatives lived very long. I think I'm going to pass away before I'm ever needing this. I'm not going to live to a ripe old age and use long-term care. And so what do you have to say to that, Tom?
Yeah, I mean, I think it's another way to essentially say it's not going to happen to me. Like it's not going to be me that needs that. And there is no way you can sit here and know definitively that you're not going to need care. No one knows that. I mean, if you've watched the show, you know a little bit of my story. I was 26 years old, healthy, had just had a kid. He was 8 months old. And I ended up in the hospital and then rehab for a month. I mean, I was there for a month doing intensive rehab because I was diagnosed with an autoimmune disease, right? It affected my spinal cord. I couldn't walk. I couldn't get out of bed. And I was going through rehab. Once I left rehab after a month, I was still in a wheelchair for 3 months later. And so, yes, you might live a short life, right? I mean, we don't know, but it could happen. But that's not to mean that a situation couldn't arise while you're young, like it did me, and really impact your family. Like my wife, Chelsea, had to take care of me. We didn't have any insurance for this. I mean, we were 20 in our 20s, right? You never think this is going to happen to you until it does. And at that point, it is too late to do the planning. If you are trying to plan in the crisis, it's not planning, you're crisis management, right? You are trying to figure out just what we do the next day. My wife's trying to take care of our son. She's trying to take care of me, trying to keep the household running. It was awful, right? And she ended up getting sick through all of that, right? I mean, if you were taking care of someone who's chronically ill, you yourself end up a lot of times becoming ill. And that we experienced that when my wife was trying to do all this stuff because it's stressful, it's hard. You end up not taking care of yourself because you're focused on this other person. And it really is just it's an awful situation to go through, and it can happen to anybody. And so you don't know it's not going to happen until it's too late. And so you need to do the planning while you still can.
Sure. The next one is I can't afford it, which a lot of times can be reframed as I'm not paying that much money for this insurance. It's too expensive. Regardless, I mean, just what do you have to say to that, Tom?
Yeah, I mean, I think it's back to sort of that statement I made earlier is that cost is only a problem in the absence of value, right? You know, again, the people that we never hear that from are ones who've been through it, right? If their family has been through it, they know what the cost looks like. You know, it could be as high as 10,000 a month, depending on the level of care. Obviously, it ranges a lot. A lot of them are in like the 6 to 8,000 range. And if you had a policy to help pay for that, you would be willing to pay, you know, kind of whatever it costs to do that, right? And it is expensive, right? I mean, the cost, if you just looked at the premium, can be more expensive than other types of insurance, but that's because the risk is so much more costly. If this happens, it can be really detrimental to your finances. And so let us be the determining factor whether you can afford it or not, right? When we're building this part of a larger plan, we're not going to recommend something that you can't afford. And that's where it's helpful to do sort of the holistic planning is we can sit down, we can look at everything, see what makes the most sense for you. And yes, maybe you're not buying the most comprehensive plan, you're not buying the Cadillac of the insurance policies, but even a short-term policy, something that helps even for a year or 2 years, can be hugely impactful to your family to have something there to sort of bridge that gap, help them figure out what's going on. And so let us help you determine what you can afford and what you can't. And again, it's important to think about, not just the premium, but what the cost is of what it's paying for, if you were to need some type of care.
Okay, and this last one, we still hear this. If it comes to that, which they're referring to long-term care, I'll just do myself in. People talk about, well, I'm just going to get in a boat and turn the rope loose, and I'm going to just. A lot of times they're just laying this up, but we get a number of people that tell us this still. And so, what do you have to say to that, Tom?
Yeah, I mean, when someone comes in and says that, to me, it tells me they're just really not wanting to have the conversation in any way that's serious, right? I mean, to think that that happens in reality is not true, right? We do not have a pandemic of our elderly committing suicide in some type of way, right? It just doesn't happen. And the problem with thinking that way is, how do you know when it's time, right? I mean, how do you know you've passed the point where, okay, I'm done. I'm just going to go do whatever they say they're going to do, and people put it all sorts of ways. Is you don't, right? I mean, it generally happens progressively over time. In my situation, it was a very acute event that caused it, but a lot of times it's not. It's a slow progression. And when do you know? One, I hesitate to even give it any serious thought because people really aren't serious when they say that. But even if you were, even if you were truly believed in your heart, this is what you would do. How do you know when that time is? And then really, then you're having your kids sit there, helping. They've been involved up to this point, and you're just going to put them in a situation where you're making that decision. It just really is not a realistic thing that happens. And if that's really you, I really want you to give some serious thought of like, okay, is this really what I would want, or is this me just trying to avoid the problem, trying to ignore that this could happen? Because this is a tough thing to think about that you could happen, right? This is not fun to have these conversations, to think through that this could happen to you. But when we're doing them, having these conversations, I want you to be honest with yourself and really think through what this would look like if it does happen to you.
Okay, so I want to finish this part of the thing by just talking about long-term care insurance and preparation. Long-term care planning isn't really as much about you as it is your family, your adult kids, your spouse. They're the ones that bear the brunt of this. And so what we're wanting to do, and you're going to see in these examples, is the insurance. What it does is it provides the money to pay for the care so that your family does not have to focus on the money. Because I'm just telling you, I've been in a lot of these situations. There is no insurance. Even if the people are wealthy, the money is the main part of the conversation in the absence of insurance. When what we want the conversation about is about you, what just happened to you, the illness, your ability to care for yourself, the care we're going to bring in, how good is that, not how we're going to pay for it, is really a stop sign. So the insurance is really more for your family than it is for you. So now we want to go into the two examples that we have. And the first one we're going to talk about is Joe and Sue. Joe is 80 and Sue is 74. And Joe is an MD. I've known this gentleman for several years. And Joe purchased some long-term care insurance many years ago, through me. Joe had a severe stroke in December, just a little bit ago. Pretty severe stroke, and he spent about 10 days in the hospital. And then he was transferred to a rehab. And, his Medicare and his Medicare insurance paid for the hospital. The Medicare insurance paid for the rehab. He was in rehab longer than most people, about 30 days. And he was going to go home at about the 20th day, and then he had developed an illness, developed sepsis, and then he had to go back into the hospital and have some surgery. And he's in the hospital. Then he has back to the rehab for some more time, and now he's going to be sent home. And in rehab for 30 days after the hospital. He's going home only because of the home health care insurance. So the home health care insurance is what's making going home. So Sue is an RN, but she's retired. She can't take care of him. Joe is a guy about as big as me or bigger, and Sue's just not able to do the things that she's needing to do for him. But in any case, the home health care insurance, they're actually getting some help from Medicare because he's going home. But the problem with Medicare is it's just visits. So it's skilled visits. They're coming in to do some specific things for him. It doesn't involve aides. Aides come in for hours. And home health care insurance that they have pays for those aides. And so we're just setting all that up. Joe and Sue, they have hybrid long-term care insurance. They bought it with a lump sum from their IRA, and it's just been paying for itself over the years. And now they're actually using it. It has unlimited lifetime benefits for both of them. One of the things we heard out of Joe, I mean, I didn't talk to him directly, but through Sue, is he didn't want her activating the long-term care insurance for him because he didn't want to use up her benefits, because he had it in his mind that she's the one that's going to need that benefit. And what I passed back through to him is he's not using any of her benefits because they have a joint policy that is unlimited in terms of the number of days and years that it pays for both of them. So he's not using any of her benefits. And Joe is a retired MD and Sue is a retired RN. So this couple is just in crisis. We have the claims concierge service from this insurance company. They've been wonderful to deal with. They're just on top of it, making the phone calls, sending the stuff. We have access to them. I can't speak highly enough. And really, Sue has just been relying on us to deal with all of that. She's hyper focused on Joe's well-being and his care, and obviously very concerned and nervous about him. They live over on the water, way out in eastern North Carolina, in what is a rural area. So, I mean, she's focused on all of that and her own well-being. So now I want to pass it to Tom to talk about George and his brother.
Yeah, so this is just another case study. It's two brothers, and tragically both had the same diagnosis around the same time. And so we have two families, two brothers. The diagnosis was frontotemporal dementia. It's the same diagnosis that Bruce Willis had. And then to make matters worse, they also had ALS on top of that. So really, just really awful situation. George, years back, had bought a long-term care policy. He saw the wisdom in it, wanted to do the planning, got it. His brother did not. His brother's wife was a nurse, said, oh, she'll take care of me. She has the training. She can do it. I don't want to pay for the insurance. And so she'll take care of me if it happens. And so they go along and then they get these diagnoses. And it was just really interesting to see how, even though both families were successful, both had money, one had insurance, one didn't, just how it impacted their families differently, right? So for George, one, you go through the hard time of getting the diagnosis, working with the doctors, and it's an awful diagnosis. And so they get through that, and they have the insurance. They can start bringing people in. And the impact it had on the family is that the family was still around, but they got to spend the time, the last years with George, really just bonding over this really awful situation, right? It's not like I want to say they enjoyed it in any way, right? It was awful, but they got to, spend those last years really loving on George, caring for him in a way that his brother's family really couldn't, because his brother's family, even though they had money, it was always, my wife will take care of me. And she did, right? She took on that role because, again, she didn't have a choice. And she started providing that care. And she ended up staying at home for over a year. She didn't leave the house for over a year. And the first time she was able to leave was to actually go to George's funeral, right? I mean, and she, really, unfortunately in this situation, her kids really didn't step up to help. Because a lot of times, oh, my wife will take care of it, my kids will be there to help. The kids were working, they didn't live close by, they didn't step up to do any of that. And the burden really fell on his wife. And she is just, just really, really struggling to provide the care, trying to do all these stressful things on top of having to deal with the grief of seeing your spouse go through this. I mean, it was just a stark difference watching them go through an awful scenario. But what the insurance allowed George's family to do was spend that time together, really care for George, love him, and really try to help those last years be the best they can. And it just didn't play out the same way for his brother. And so again, it's a really sort of interesting situation because we got to see it play out on both couples going through this in a very similar situation to start, but the end result was just drastically different between the both of them. So again, this, to Hans's earlier point, the reason you do this planning, the reason you consider the insurance is for your family. They are the ones who benefit from this at some level. And I experienced this, right? When I got sick, I got the care I needed. If you're sick, you're going to get cared for. It's just who is providing that care and what does that do to their life. And so that's really where the insurance is very impactful, and why I really encourage you to really think through this problem and think of what this would look like, play it out in your mind of how this would impact everyone that you love.
So this subject of long-term care, in terms of comprehensive financial planning, it touches the other 6 subjects. I mean, Social Security, I mean, these people that are self-pay people, that's the first thing they're going to send to the nursing home is your Social Security check. Medicare, I mean, Medicare is going to pay for skilled care, but it's not going to pay for custodial care or home health aides, which are what you really need with the activities of daily living. We touched on your IRA 401k. A great percentage of the people that buy this stuff through us use their IRA money, or they use a portion of their IRA money, and they're also able to meet RMDs or minimum distributions. It's a whole function of that, but that's the block of money. They just take one block of IRA money, put it toward this. They don't have a taxable event immediately. It's spread over 10 years. It is a great thing. It touches your income because it's just a redirection of cash flow. It affects your estate because you're going to leave a person behind if you're a couple and the first one to get sick. If you're the second one or you're a single person, it's really affecting your estate if your estate is paying for this all the way down the line. And then, there's tax implications of all of this, of really everything we want to do. I want to bring Tom back on. And we just really want to talk about, this is not a subject of all 7 subjects. When we're going to talk about this, we just don't get that many people calling in. This is a product, there's a huge need for it, and there's almost zero demand out there. And so people are reluctant to reach out to us over this subject. And usually when they do, I'll let Tom talk about that. Who are the people that do reach out to us over this subject?
Yeah, there's really 2 groups of people that proactively look for this type of insurance. The first one, and unfortunately, are the ones who have gotten some diagnosis. Like they've gotten sick. They now really can see this might happen. And oftentimes at that point, it's too late, right? I mean, in my example, like if I tried to buy long-term care insurance right now, I wouldn't be able to get it. I mean, maybe later down the road I could. There's some companies that take older people that maybe I could get. But once you have a diagnosis, it becomes much more challenging to get it. And so that's one group of people who reach out is they've gotten some diagnosis. Now they really see this might happen. They start looking for insurance, and oftentimes it's too late. The other group of people are the ones that have just been through this or have been through it with their family, right? They saw what this did, and they say, there is no way I want to put my family through the same thing that I just went through. And they're the other group that will proactively look for this insurance. And so if you're not in either one of those groups, I just really want you to learn from their lessons, right? Especially that second group of people. If they're the ones who really want this, is because they saw what happened without an absence of this. maybe read into that a little bit. It might be a reason that you might want to look at it too before you have to experience it and before you have to go through some medical diagnosis that makes it harder. And so I think Hans is exactly right. We don't have a lot of people reaching out specifically for this, but of everything we do, I think it's the way that we can most beneficially impact someone's plan in life is if we can help them get this set up. I think they're in a much better position they were before they met us.
I get the most out of doing this for people because I've worked so much at the back end of this and just see what this stuff does for people. So if you've been reluctant in the past, just reach out to us. We can have a conversation, kind of a risk-free conversation. We're not going to pester you with phone calls after that. We don't have time for that. And we're not going to charge you anything for initial discussion just about this stuff or a whole financial plan for that matter. I'm Hans Scheil,
And I'm Tom Griffith.
and we thank you very much for listening.
Thank you.